Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So we have economic news. The CPI data just hit about 30 minutes ago. Overall, the market is okay with it. Generally, it was good news. Still no major spike in inflation from these tariffs. And again, that's one of the things the market was kind of holding its breath going into today. Could we get decent inflation numbers? And they were just that. They were decent, right? So if we're looking here at month over month, it came in at expectations of 0.3%. Year over year was slightly hotter at 2.7% versus 2.6% on the inflation front. So a little bit hotter on year over year, but this is the kicker. The core CPI month over month was 0.2% versus expectations of 0.3%, and core year over year 2.9% versus 3% expectations. So again, understand what this is, right? Core is when you remove food and energy out of the number. The reason why core is semi-important is because, again, if you're looking for inflation in all of the goods out there, TVs, this and that and everything else, you want to kind of get a picture of what that is. Food and energy has a very kind of rapid rate of going up and down. For instance, oil, right? If you looked at oil when you had Israel bombing Iran and Iran sending missiles back, oil spiked to $77 a barrel. It then reversed all the way back to $65 a barrel. So the idea is when you remove that, what is inflation of everything else? And that's kind of why people pay attention to the core rate. So overall, core was a little bit less than expected. Year over year was on the main front a little bit more. Overall, good news. Now, the question I have, does this embolden the trade war to actually put into effect higher numbers? Meaning that we've heard these letters going out, 35% on Canada, 30% on Mexico and the EU. And I guess I would say, does the administration think to themselves, okay, well, if we're not seeing inflation and the stock market's at all-time highs, can we get away with upping the numbers here and actually hold to some of these? And so that's something that I think the market's not thinking about, but I want you guys to be aware of that it may embolden the administration to actually hold firm on some of these future threats on August 1st. All right, let's get into the charts and take a look. We did have earnings today as well. We'll go into the earnings details. Here's where we had the CPI data. So you can see the CPI data initially spiked the S&P futures to the upside. We then kind of came back in and we're net slightly up from where that data came out. Now, overnight, we saw a massive move here. Look at this. This was the S&P futures last night, basically just before 10 o'clock p.m. Eastern time. Look at the pop in the S&P futures. Now, why did this happen? The answer is simple, and I'm going to reveal it. Then we're going to look at the chart of Nvidia. So how many of you guys, I think it was last Thursday, remember on the news when it was reported that Jensen Huang was at the White House meeting with President Trump? Okay, now we know that overall there's been a block on the AI chips, the H20s or whatever they're called, the top level of AI chips being sold to China. And we know that President Trump last Thursday came out on Truth Social and he bragged about how good Nvidia's stock has done, up something like 45% since Liberation Day. Sure enough, they got together late last week, and Trump has now removed that ban on selling these chips to China. And so again, that's why the S&P futures had this big pop in the overnight. We then saw it fade, but then overnight it kind of floated higher, and that's where we currently are. Now, if we look at Nvidia is up sizably. Take a look at this, guys. A big move up at 4 in the morning when the stock began to trade, trading all the way up to about 170 to 280. It then pulled back and is floating higher back above 172 today. All right, so that's going to be something interesting to watch. Semiconductors, which have led the stock market up, are leading the markets again today. All right. Even before the CPI data, the markets were up across the board because pretty much every semiconductor out there, AMD, Texas Instruments, Micron, they're all trading higher today on the back of this. All right. So let's go back here and take a look. I want to, before we get into, actually, you know what, we'll get right into the chart of Nvidia. So number one, I was doing a lot of charting on this and looking to see. And this is really the last kind of stand that I have on Nvidia in terms of resistance, and it's two-factor resistance. Now, based on where Nvidia is currently trading, it's just above this area right here. All right, so pre-market, it's above. I'm going to be curious to see, do we during the day close back below this line? And again, you can see where this comes from, right? If we look at the chart, we have the low here. This is the beginning of that bull run that started in January of 2024, connects through the low in August when we had that big correction, connects through this secondary low in September, and then again right through here. And you can see underneath, we kind of came in, we kind of pierced it, then pulled back. And this would be a resurgence to that same level right up here, right around 171 to 170. All right, now if we look at this upper trend line, this is really the highest point to the highest point. It's just that simple. I'm not reinventing the wheel here on NVIDIA. It's just taking the highest point from June 2024 to the highest point since then before the recent move in November of 2024. Those two trend lines converge up here. All right. So again, we'll have to watch and see what happens here. But this is kind of your last area that I have any major technical resistance right around 170 to 171. All right, let's go back to the S&P 500 here. We continue to watch an S&P 500 where it has three trend lines. And again, we'll be opening up a little bit today. Again, listen, it's not a huge gap up today. It's not over 1%. I think the S&P is up about 0.5% or so going into the day. So again, we'll open right here, but this remains the big area to watch on the charts. All these three trend lines here, which again are multiple levels that have teeth based on pivot points on the charts, and we're watching to see, do we go up into them? And if we go up into them, can we break through? The market absolutely continuing to show its resilience. There's nothing that can be taken away from that, right? So you have to just say the power is in the markets. Many people asking, well, what's the bear case for the markets? And this is what I've said to traders and investors for the last 10 plus years. And this is what I found out is that there are plenty of bearish cases, right? The economy could slow down. Inflation could pick up. The trade war could escalate. Things with China and Taiwan. Who's even talking about that anymore? At what point does China say, hey, we're going to just go in and take Taiwan? Who knows? But the point is that all of these factors, the market is ignoring. And this is what the market does. It ignores them until it doesn't. And I know that sounds weird, right? It ignores them until it doesn't. Well, at some point, we'll wake up and be like, holy cow, the market is now starting to pay attention, whether it's valuations on stocks have gotten too lofty or other things like that. Now, do I think we're close to this level? Absolutely. Again, the charts are the charts, and I just follow the charts. That's what I've done now for 20 plus years, 26 years, is followed the charts. And the charts by no means are perfect, but they, again, guide me to a high percentage probability win. All right, let's get back into some other charts here. Let's go into a few other things here. By the way, great reversal on Bitcoin. I'm going to cover that. Bitcoin put in a topping tail yesterday, guys. That is epic. For now, we'll have to watch and see if it gets negated. But before we do that, let's take a look here at the dollar. The dollar was right up into resistance here. We talked about it yesterday. Downsloping trend line. Right now, it's right on that level. Going to keep a close eye on the US dollar. The 10-year yield, because inflation is nothing to be worried about at this point, the 10-year yield is pulling back. Why would the 10-year yield pull back on that? Because if there's not an inflation issue, the Fed is more able to cut rates, which even though they don't affect the long bond directly, that does overall have an impact on the 10-year, the 20-year, and the 30-year. All right. JP Morgan reported earnings this morning. You can see the chart pattern that it was trading into earnings here. So again, you can see generally a bear flag. If we go to the intraday, you can see it was up a little on earnings, then it was down. Now it's basically back to the flat line. But overall, the pattern is the pattern. It's still a bearish pattern. I could see us rallying up to here around 292. That would be gap fill. In my day trading room, the Apex Live day trading room, I would consider a short on JP Morgan at that level. Gap fill with the bear flag there. Overall, I eventually expect this to roll over and trade down to about 268. Robinhood, again, they got rejected. Poor Robinhood, I'll tell you. This is the third time another company has been added to the S&P 500, and it has not been Robinhood, right? So the trade desk, which by the way only has a $37 billion market cap versus almost 100 billion on Robinhood, they were added to the S&P 500. The stock, again, you can look here on the pre-market. Look at the move when that was announced yesterday after hours. Just an epic move to the upside on the trade desk. Now, you might say, well, why wouldn't Robinhood be added to the S&P? I mean, why is it that a company that only has a $37 billion market cap is added versus a bigger market cap than Robinhood? And I'm just going to throw out my personal speculation on this. And my personal speculation is that the vertical nature of Robinhood is making the S&P a little bit wary on adding them at these levels. You don't want to add a company and then have it have a 30% correction, right? You'd much rather add something that has been around for longer, that has more of a stable track record, that's been beaten down like the trade desk, and has that possibility to move up. Now, again, a lot of Robinhood investors don't agree with that, and I understand that. But I think if you ask me what was the thought process there, I think that the S&P, again, doesn't want to add Robinhood and then see it correct 30 or 40% right as soon as they add it to the S&P 500 in the next pullback. All right. So the trade desk is trading up. There's no day trades on this level. Again, when something gets added to the S&P 500, unless it's at all-time highs and gapping even higher, I'm very, cautious on trying to short it because, again, that does create a little short squeeze. If we look at this chart again, you can see it had this big drop here, and then it kind of almost like a pseudo cup and handle right here, by the way, going into that pattern formation. All right, other companies reporting earnings this morning, by the way, Wells Fargo. So all the bank stocks reporting. I have this old trend line here. Where does this old trend line come from? Oh, interesting. All right, so look at that. We kind of just came in to hit that line. Look at that. Wow, that's interesting. So going into earnings, it came right into this longer term trend line that I had on from a while ago. Haven't looked at this chart in a while. And sure enough, it is trading down on earnings. You can see again, earnings, by the way, for most of the banks were pretty good. It's just a lot of these stocks are at all-time highs or 52-week highs, essentially priced to perfection. Citigroup reported earnings. That stock is up slightly. Notice it was kind of flat, and then the CPI data pushing it up a little bit here with the rest of the market. And then BlackRock, how can we not talk about BlackRock? They are the kings of the financial world. The stock is trading down a little on earnings, but same thing. If we go to the daily chart, look at this run into earnings, like vertical, almost green every single day. And I always tell you guys, listen, they could beat earnings by a mile, and they did. But when a stock rallies so sharply into earnings, they're factoring in like basically perfection. And it's very hard for a stock to do better than perfection. It's basically like it's being set up to come down on earnings, essentially. All right. Now, we do have other earnings coming out over the next few days, so be aware, guys. Financials are, the major financials are mostly over. We still have Bank of America and such, but this is the kicker, guys. Tomorrow morning, Wednesday morning, watch ASML. Now, why ASML? Does anyone know? I mean, hopefully you guys know what ASML is. It's a chip company out of Europe. ASML, again, is a European chip company. So let's take a look at that chart. And the reason I bring this up is that you've had this massive move up in the semiconductors, and then we look at ASML. And to be honest, ASML has not participated like a lot of these other ones. You can see it has rallied from about $580 to to 825. So it has rallied, but it's not at all-time highs. I do have this trend line right down here that I'm keeping a close eye on. Notice again right here, to there, to this pivot and this pivot. And that, again, if it does pop, I do have my short level at around 880, 877. That would also be this pivot high right here. But for the most part, watch this earnings report. If the stock falls, you'd expect chip stocks to pull back tomorrow. If this continues to rally, then the party goes on in chip land. Also, the next day, folks. So again, let's talk about the next day. We have another company reporting of big stature, and that's Taiwan Semi on Thursday morning. And this one, again, you can see I've already annotated this chart out. You can see, but going into earnings, I was bearish right here. It's already started to pull back, but you can see again, look at this classic trend line right here coming into that level, and it's starting to pull back, but I would still be slightly bearish just based on how much it's gone up into earnings, and it is up pre-market with the rest of the chip stocks. All right. Palantir was just one that I wanted to highlight to you guys. Notice the parallel. It's still respecting the parallel. High pivot, high pivot, high pivot, each time pulling back. And it just hit that yesterday at about 150. Today it is down slightly. But again, this parallel channel on Palantir is a great one that has been really moving perfectly off this upper trend line. You would generally expect that again in the near term. All right, on to Bitcoin, guys. So Bitcoin, there it is yesterday. You have your topping tail on Bitcoin. Again, what is a topping tail? Let's talk about a topping tail. Topping tails, there's a couple criteria. Number one, it must occur for me to at least believe in it, basically at a 52-week or all-time high. Check on Bitcoin. Okay. You also have to have a big surge up on volume, which we did, and then a reversal, and it must close in the lower 25%, from the low of the candle to the high of the candle in the lower 25%. That's what it did. Now, again, in classic technical analysis, that is a reversal bearish signal. All right. Now, it doesn't mean it can't fail. Every pattern, every candle can fail, but the odds have now flipped on Bitcoin to being negative. The way, and this is important, how would this candle be negated for all you bulls out there? Just simply look at this, and any daily close above the high of the topping tail negates the topping tail. Okay. So that's what you're looking for. If you want to see this regain its bullish composure and really push up, that's what you want to see. Notice today, again, Bitcoin is pulling back on the day after that topping tail formed. Very, very interesting to watch that chart. The other thing I wanted to just point out is you still want to monitor this weekly trend line going back to the 2017 highs here. And the reason I say that is you got to close above it. But the question is, can it confirm above it? Essentially, confirmation for me solidifies that it's not a fake out, versus I've seen so many times where big money will get retail investors so bullish and they'll break it above a level like this, and then retail piles in right at the high, and then they reverse it. Once it confirms, it takes honestly too much money for institutions to really fight it at that point. Now, notice how the pullback on Bitcoin, the low today basically took us back to this line. So it kind of already tested that, and so far it's holding. Now we have to monitor this. This is a weekly candle, though, so let's monitor that. ETH, let's look at ETH here, guys. Just quickly going on this, if we go to our daily chart, you can see, again, ETH is respecting this resistance right now, right here at basically 3,050, 3,100. But again, notice ETH was down and it's turned green already. That's good price action versus Bitcoin, which is a little bit weaker. So ETH actually looking okay here, even though it hasn't broken this level. The price action with it being green on the day versus Bitcoin, it shows that it's actually relative to Bitcoin stronger, and that could signal further upside in ETH. All right, let's go to gold, guys. Flip over to the gold chart. Gold, again, continuing here to basically hold the line. So the line that goes back to late 2024, the trend line here, that is still a support line. It's right around 3,330. If it breaks below that, then you have the bigger move. Obviously, you want to see confirmation, right? But then the bigger move to 3,050 down here would be in play. As long as this holds, it's in a wedge pattern. 3420 to 3330 is your wedge pattern right now. This number will go down a little bit because this is a downsloping trend line. This number will go up slightly every day because it's an upsloping line. Essentially, when you're stuck in a wedge, what do we know about wedge patterns, guys? Let me do some teaching here. So wedge patterns are condensing price. It's like a pressure cooker. And so as it comes to a head of the triangle, price is getting tighter and tighter, wound. The spring is being wound. The pressure cooker is pressurizing it. And once it breaks, it's like an explosion in that direction. And so essentially, this gives us a good way of looking at gold, right? So if we go back to the gold chart, we can see if it breaks here, it makes sense that it would then come down here because it would be a big move. If it breaks here, it likely takes out the all-time highs and continues to march towards 4,000. All right, silver hit my target yesterday, guys. Again, if you were paying attention over the last week or so, you guys know I've been saying bullish pattern on silver up to $39. Boom, 39 gets hit, pierces it by a few pennies, and look at the pullback yesterday. Short term, this is a topping tail as well, so it also needs to be respected, right? And listen, I don't make the rules, guys. I'm just literally here to translate what the charts are saying, and that's why I always say, listen, whether you're bullish on silver or Bitcoin or bearish on silver or Bitcoin, that's irrelevant. The point is that if you looked at 100 of these or 1,000 of these candles, they play out more often than not to the downside. And so that's what I'm doing. I'm translating what the odds and probabilities are. Everyone can make their own decision. We all have our own biases. But again, my job here at Verified Investing is to give you guys a view of no bias, just purely what the charts are telling us, right? That's the translation here. All right, on to the next one, oil. Oil we knew was in a bearish pattern. Look at how it went right up there, and look at the pullback yesterday. This, again, is a pattern that I've highlighted to you guys. Downward move, inside bar consolidation in a tight parallel. It is, just like it says, a bear flag. What does it tell us? Which way should a bear flag go eventually? To the downside. Very simple. Lastly, natural gas here, guys, and then I got to get over to my trading room and get ready to trade this market. Nat gas, I found this new trend line here. Pivot low here to here to here. So that's the one that I'm respecting. If that breaks, which is around $3.20, I actually think you dump all the way to 263 to 264. But right now, this one is holding. We're trading back up. I'll show you a level that if we get back to, this will be an interim resistance level right here. Let me see here. Right around here. Why? Pivot low, pivot low, pivot low. Notice it did pierce here and then reverse very quickly. Notice this line is parallel with this line as well. So right here, this would be a double top with this little pivot. So right around 375, if it gets there, I would start to expect resistance to see if it reverses back down to the low angle of this. All right, guys. Wow, an action-packed. It's good to actually have some action here. I mean, listen, there's always something to look at in the market, but earnings have started, economic news. Tomorrow we get PPI. I mentioned ASML earnings tomorrow morning, so I'll cover those in the game plan tomorrow. Obviously, Drew in trading the close later today will cover what happens throughout the day today. It'd be really interesting to see where these semis and Nvidia close, but really, this market continues its resiliency. Even though it's not up a lot, it's just the grind. It's the up every day. Yesterday, we ground up throughout the day on light volume, looking into these numbers today. And today we're up again. We'll see if that continues, or at some point, do we get a reversal? You guys have a great one. Thanks so much for tuning in. I'll talk to you soon.